Welcome to Intriguing Investments with Mine. So today we're going to be looking at the Apple stock, which has been down more than 20% since its all-time highs. So we're going to be looking at this stock because a YouTuber named Jesse, Opportunity Cost Investing, said that he wanted to see a video on it. So that's what we're going to be looking at. And no, I got better lighting, not new lighting. It's not that good, but better lighting. Anyways, their iPhone 12 is the major catalyst for this stock right now. They're going to be releasing the iPhone 12. So this video with the iPhone 12, with the release date, the price, and the Apple event date, got a lot of views with a YouTube channel with only around 50,000 subscribers. So that shows that a lot of people are really intrigued by this Apple iPhone 12, and that means that they're probably going to get a lot of sales. And if we scroll down, we see a lot more videos on it with millions or hundreds of thousands of views on this Apple iPhone 12. So is it going to have lots of sales on this iPhone 12 compared to their other releases of their iPhones? Yes, that's what I believe, because these videos are getting lots of views. So let's go look at some more things to actually help us determine the value of this company or if we should buy it. So remember when there was a whole bunch of videos when this stock got a $2 trillion market cap? Well, since then, it is down by a good bit from its all-time highs of its market cap. It's at $1.83 trillion, okay? $1.83 trillion. That's a huge market cap. But compared to its enterprise value and market cap, that is not a significant difference at all. There's not a significant difference at all. It is not even like at $2 trillion. Their enterprise value used to be more, and their market cap used to be more, and now the only difference is about $0.07 trillion, showing people are less bullish on this company. And we know that their market cap should be better because we already see their competitors, Samsung and LG. They have a market cap that is tremendous as well, but they do other things in their business, not just phones and stuff. So we feel like, well, I at least feel like that their market cap and enterprise value should be way more than this. And their total debt, they have a good bit of debt, about more than $100 billion. They have less cash than debt right now, so that could present some problems for you. But knowing this company, they're finna get a lot of cash with this new iPhone 12. So their volume is lower than their average volume, also indicating that this is less hyped, and a lot of people don't like it as much. So we also see that institutions do hold this, and we've seen that I'll show you more about the institution things. But anyways, we see that Microsoft is starting to reach the market cap of Apple, not there totally, but really, really close. That is just telling me that they're not really that close. They're at least 0.4 trillion away from each other at almost all times. So I really don't see why it's like that. And the short interest, not a lot of shorted shares. But this company is a really good company. So let's go look at some other things. Oh, I also wanted to show you the revenue. So the revenue, despite what a lot of people think, it hasn't really increased that much. And we know in the time span of 2015 to 2019, they have released more than 3 new iPhones. And the revenue is just kind of staying steady, not really growing very tremendously. But I do believe that the revenue this year will grow more than this. Maybe it will be around $307 billion. I think it will at least reach $300 billion. Just my personal opinion for next year. I think that is what's going to happen. Anyways, let's go look at some more things. So we're going to be looking at the price to sales ratio, also to indicate if it's undervalued, overvalued, and those things. So we see that their price to sales ratio was really high, almost reaching 9, but it was around 8.5. And now it has since dropped to less than 7, almost trading around its regular price to sales ratio of around 6. So I think anywhere around 6.5 or higher is kind of high for this company, but 6.5 or lower is a pretty good price. Especially below 7, I think that's a pretty good price for the price to sales ratio, indicating not undervalued, but maybe compared to what it is usually traded at, it's undervalued. So we see that the price to sales ratio is below 7, meaning that it's probably a good time to buy it, especially if you don't own any shares of this company. Now, if you own shares of this company, I'd say get a couple shares at a time. But if you don't own any shares of this company, it might be a good time to buy. So let's look at analyst ratings and things of those sorts. See what they have to say about the company. Oh, sorry, meant to go up. So, anyways, they are usually bullish, but let's go right here. Wall Street analyst ratings, because we just want to see what they think. So their target price has just been increasing steadily. That is a pretty good increase. So it seems like they're still bullish on this company, which I like. So I also want to go to simplywallstreet.com, a great website to determine the value or just to see the pros and cons of a company. So we see that their health and past and future seems pretty good. So their earnings are forecast to grow 7.21% per year, which is not tremendous. I like to see, as far as a growth size value investor, earnings forecast of more than 10% per year. And their earnings grew by 4.9% over the past year. This company has a high level of debt and is highly volatile share price over the past 3 months. So guys, I don't own any stocks, any of this stock. So just a full disclaimer there. Also, the past performance of this company has been really good if we're not looking at like the short term but the long term. So for long term investors, looks really nice. So we're gonna see the valuation. We want to kind of determine what we should be paying for it based upon its intrinsic value. So we see that their fair value is $66.57, current price of $106.84. So it's more than 50% overvalued, but I actually this is just the intrinsic value. I think that this company should have a hefty premium of around 20%. That means that the price of the stock should be around $80 or higher as far as a buying situation. Now, if you don't own any shares, like I said, you may want to actually price in a little bit more than that, like a 30 to 40% premium, because you don't own any shares, meaning $90 to $100 may be a good time to $90 to $105 may be a good time to buy. And right now it's at $106. So I do want to see it drop a little bit more, but I think that would still be greedy as it is more than 20% below its all-time highs, at least 52-week highs, which is their all-time highs. So I also want to look at some other things for this company. You can go to a YouTube video and you can find the September event of 2019 of Apple. Just so much hype around that, and you can just see a lot of other things for this company. So I want to look at also the rating of this company, what analysts think compared to what happened last time. So we see that their downside is tremendously less than 30 days ago, 90 days ago, and especially 180 days ago, meaning more people are bullish on this company. And the people who do own Apple, I'm pretty sure they want to see more growth for this company, and they just want to see tremendous growth in the stock price. And I'm pretty sure that they won't allow this stock to go below $100 just because of that. So we see 4 sell ratings, which is more than 90 days or 180 days ago. But I don't really like to look at those because that's like those people who are saying a sell rating are saying that if they owned Apple, the whole company right now, they would sell it. And I don't understand that, so I never look at the sell ratings for Apple. Now we see the 14 hold ratings, which I think I look at because if I own Apple company, I would hold it. And if I didn't own it, I would probably want to buy it, but for what price? And we see that their consensuous price target is $104, which is higher than 90 days ago or any other time period. And right now, it's actually trading above that. So it's showing a little bit of downside, but only 2.19% downside. I really like that a lot of people are bullish on this, meaning they're probably not going to allow it to go lower. So we want to look at the iPhone 12, look at some pictures of it, see how good it really looks, and see the change. So this is kind of what it's going to be looking like. So we're going to have the iPhone 12 Pro and the iPhone 12 Pro Max, which is what I think a lot of people are going to be wanting to buy if they're really upgrading tremendously and they're really fanatics of Apple. They're going to want to buy the best, which is going to be, all of these are 5G technology phones, but we're just looking at the best ones with 4 cameras, okay? The iPhone 12 Pro Max. I like to see a major change compared to its other iPhones, and I'm seeing a major change, and I like that. So if you want to see more videos on this stock, definitely go check out my bullish thesis on it. And I put Apple stock has a lot of potential energy, and it really does. Okay, really good company, really good stock, and it's tremendously shorter. That video is like less than 5 minutes. So how has Apple performed with these video with them releasing new phones. So we see that the iPhone, when they released the iPhones, it was kind of volatile. Sometimes it did really good, sometimes it did kind of bad. And this is from 60 days after an iPhone event. So we see that it's not actually recommended. It's not recommended, but it's not for sure. It's not a for sure thing that the price will increase because of it. But it's just in my personal opinion, with this 5G technology and new technology, I think it's going to be one of those times when it increases tremendously. And we see in the past, the most it ever increased a day after the iPhone event was 3%. So we're not going to see a huge increase after the day, maybe 3%, maybe 2%, but I don't expect a 10% increase. So that's all I have for you today. Make sure to subscribe. Just demolish that subscribe and like button. Huge shout out to Jesse, Opportunity Cost Investing. He explains the stock split perfectly. He tells you where opportunity cost investing. He has a book. He has a lot of cool things, and he has a website. A lot of cool things to help you during your journey. Make sure to subscribe to him. Make sure to subscribe to me. Thank you for watching to the end. It truly does mean a lot, and that's all I have for you today. Thank you so